What is up, guys? I'm Jay, DCA Adventure, back again with another video, and today we are going to talk about the brand new feature released by Bybit, and it is called Mutual Insurance. If you guys like our content, please smash that like button, subscribe to us, hit that bell for notifications, and guys, if you would like access to the DCA trading script, join the Patreon group, join my tier. It is called Trading with a View, and by joining it, you will get access to the DCA trading script. Also, you will get access to a private room inside the Discord. In that private room, we are posting signals, trading signals, and posting general market talk and what us Patreons are looking at. The Patreons get the information before anybody else. So guys, get in there. We will teach you how to use risk management and get you a button-down trading plan. Super cheap and affordable. The tools that you have access to are super cheap and affordable, so get in there, check us out. Also, head over to Crypto Mentors. That is my own personal Discord along with Astro Park. Link for that will be in the description. Check us out. We have several different kind of trading bots over there, and any kind of trading script that you could imagine. Anything, we can even make one tailored to your specific trading needs. So get over there and check us out. Also, guys, we are doing a special promotion with Bybit right now, and we're doing this in lieu of the mutual assurance feature that they have came out with. So if you guys use my Bybit affiliate link, which that will also be in the description, use that link, sign up, and even with, for you Patreon guys, go in, make a new account, and use my link, and you have 2 weeks. So what you guys can do is on your first deposit, if you can get up to 0.05 Bitcoin, you will get $25. Deposit 0.1 Bitcoin, you'll get 50. Deposit 0.2, and you will get 100. Now, you have 2 weeks to do this. So if it takes you 2 weeks to deposit 0.05 Bitcoin, then you'll still receive that $25, and so on and so forth. If it takes you 2 weeks to get 0.2 Bitcoin in there, you'll end up getting a $100 bonus. And these bonuses, guys, will help with fees, and you'll pretty much get the trade for free. So get over there, get a new account. Any new guys, sign up and take advantage of the promotion while it's here. This is for DCA. I will have a special link for it in the description, so make sure you keep an eye out for that. Head over to the Doge World Apparel too. I forgot to mention them. Doge World Apparel, get over there and get some DCA swag, guys. Good quality merchandise. Love it, love it, love it. The competition just came to a close, and the Bull logo won, so be ready for that, guys. As soon as it's released, I'll definitely be buying that up. But let's get on over here and talk about the Bybit Mutual Insurance Fund. Now, this is pretty good, guys. This is really good for new traders, and it's pretty good for us seasoned guys too, because we can hedge on our trade basically, and we can cover ourselves for any incurring losses. So that's always good. And we're just gonna read through this and skim through a little bit, and we'll pick out the important parts. But mutual insurance is a risk management tool that enables traders to hedge against unfavorable market movements. In the event that a user experiences loss on their insured position within the effective period of the insurance, the user will receive a payoff from the mutual insurance fund. Now, basically what is going to happen is, let's say you took a long position, and you opened a long position up for 1,000 contracts. Now, mind you guys, do not use cross leverage. Let's stay on 5-10x leverage. But let's say that you opened a 1,000 contract position, and then you wanted to put insurance on it. So whatever the size position that you opened, you were going to pay 20% for the insurance, and that will give you full coverage. So if you were to hit your liquidation price, you will be paid, you will be settled on your insurance claim for the margin used. So whatever you risked in the trade and whatever you lost, you will be paid that back. And what's even cooler is if you enter a trade, let's say you long at 1,000 contracts, and you end up at $200 in the green, you have $200 realized P&L. you can open up an insurance fund and you can put full coverage insurance on the margin that you risked and the profit, the $200 profit that you were in. So whatever margin used and whatever profit that you were in, and then the floor could fall out and it could end up coming back and tagging your liquidation price. Not only will the insurance settle out for the margin that you used, but it will also settle out on the profit that you had. So that is super cool, guys. I'm looking at it like, we open up a long position and normally I'll set a stop loss 25% behind my open price. If it hits, then you just lost 25%. So basically, I'm looking at this as, okay, I'm basically getting to set a stop loss, but I'm getting to get the whole cushion of my liquidation. If it drops 25%, instead of my stop loss triggering me out and having to pay fees and all that, I get way more room. I get that $1,000 cushion that your liquidation is. So I look at it like that. I'm able to open up a stop loss. I'm only going to lose the 20%, but I got a bigger cushion. And so instead of getting out of my position at 20%, it actually can go, all the way to 100%, and I only lose that 20%. But I will be settled on whatever I used, whatever margin I used. If I risked, $20, I'll get paid back my $20. So it's super, super cool. I've done this a couple times. I actually made a burner account and I liquidated myself on purpose to see how everything worked. And it went through, immediately. As soon as my liquidation was hit, I immediately settled on the insurance. So it was right there back in the account. We offer protection to either a long or short position. A trader with a long Bitcoin position can purchase long protection to hedge against potential downside risk. A trader with a short position can purchase short protection to hedge against perpetual upside risk. Potential, sorry. What are the main features of the mutual insurance? Traders can take out insurance for periods of 2, 12 to 48 hours. Which is super nice. And then you can also have it on auto renew. So let's say you opened up your insurance for 48 hours and you ended up being in the trade for longer, or you may end up in the trade for longer. Instead of having to sit there and keep checking in every 48 hours to renew the insurance, you can click the auto renew button, and as long as you have the available funds to pay the insurance, it will automatically renew after 48 hours. So that way it'll keep you covered until you don't have enough to pay for the insurance. And like I said, guys, it's usually 20% right now of your position. So it's you're paying 20% no matter what. But if you can let your position run, you can make that plus way more back. You don't have to worry about the downside anymore. You can just let it run. And then if something bad would happen, you're really not out anything but the 20%. You're still going to get back the margin that you used. Traders can also decide to take out insurance for 100% of their position or partial insurances for 75, 50, or 25% of your position. So that's also a cool feature. You don't have to do 100%. You can only do portions of it. Traders pay an insurance premium to get protected. All the insurance premium will be credited to a mutual insurance fund. And all the mutual insurance payoffs come from mutual insurance fund. That's why it's called mutual insurance. Bybit will inject 200 Bitcoin as initial capital to launch the mutual insurance fund. So basically you're getting to trade without risk. Bybit's mutual insurance is a good risk management tool if you foresee high volatility or when market trend is unclear. If the market moves against your position, rest assured that you will be compensated. So we're going to go in and I'm going to open up a position. I am going to show you how to buy the insurance fund. And I don't know if we're going to let it liquidate itself, but we'll see here. Make sure you guys use the link in the description. Not only will you get to check out this new feature, but you will get to be part of the promotion. And like I said, if you use my link, then you have 2 weeks to deposit to get your bonuses. So get in there and get that done, guys. I'd greatly appreciate it. Okay. So, what we're going to do, we'll leave that moving averages up. Okay, so you guys are all familiar with Bybit, and anybody who is not, I do have a tutorial on Bybit. Go check it out. They are going to release a few more other features. We are going to be able to trade Bybit right from a trading view chart. Super awesome, guys. Any of you Patreons that are using the DCA script, it's going to be nice to be able to set alerts on the script and make trades all from one location instead of bouncing back and forth. This is huge. I'm pretty excited about it. So when they roll that out, we will make another video showing how to set your API up and do everything accordingly, so that way you are able to trade through TradingView and make leverage trades onto Bybit. So be watching out for that video, guys. Also, for anybody that is trading Bybit on their mobile, they do have new feature there where you can set up alerts. So any conditions that happen that you would like, they have all different stuff. I think they got like moving average crossovers, certain patterns. There's all kinds of different stuff, but you can set it to your condition and it will alert you via email, I do believe. And I think you can set up text messaging too. I'm not 100%. I don't trade on mobile too much, but I do know they came out with the alert system. Okay, so let's go ahead and put our leverage on. We'll go 25x. Guys, typically I want the new guys to stay between 5 and 10, but this is a burner account, so I didn't deposit very much money into here. So I'm going to use a little bit higher leverage so we can use a higher position. Okay, so let's say we're looking here at this chart pattern. This is on the 1 hour chart. The guys in premium know what pattern that we have posted and what is playing out right now. But let's say you're looking at this chart and you are looking to long. We just had a nice dump. You can see that we had a bunch of buyers decide to come in, and they got the price pushed back up on this candle here. So let's say we want to long that, and we're going to go an even, let's go 400 contracts. So we're going to come over here, we're going to click 93.22, we're going to buy long. Okay, so now we are in the long position. You see it's over here. So now what we're going to do, guys, we're going to go down here to where it says buy insurance. And then from here, this is where we can pick what we're going to do here. Let me get this moved over so we can read. Okay, so the margin that I used was $16.32, okay? Estimated payoff, 0.0016. That's $16 in Bitcoin, okay? Our insured price is $93.30. That's when we got in, $93.29, somewhere around in there. Auto claim liquidation price would be $9,007. So if we hit our liquidation at $9,007, we will get the estimated payoff of 0.0016 Bitcoin. Super sweet, guys. And what's cool is now we got in at 9,300. Our liquidation is at 9,000. So we got that $300 and some dollar cushion right there, to where, let's say we wanted to put a stop loss 25%. Let's see, or 20%. Let's see what it would be. Stop loss. Okay, so if I put a stop loss at minus 25%, so let's say 20, it'd be around $9,200, okay, would be my stop loss at minus 20%. So I'm at 93. That's not a very big cushion, okay, for a 25% loss, and I'm losing 25% of my portfolio there. It doesn't make sense for me to do this when I could go pay 20% for the mutual insurance, and then I got the whole cushion of what my liquidation price is. So instead of taking a 25% stop loss and getting out at 92.30, I can get a 20% insurance fund that's going to pay me, and I got all the way down to $9,000 before it actually takes me out of the position. So just kind of weigh that out a little bit. Instead of getting chewed up in the fee of, not only are you losing 25%, but then you're paying a fee on top of that if you're using a market order, and and you don't have a very big cushion. So using a 20% mutual insurance fund, you are making the risk of your trade a lot lower, because you are actually going to get back what you risked in the first place, which was $16. So we will get paid the $16 back, and we only lose the 20% if we come all the way down to 9,000. So it gives you a little bit more room to let your trade play out, because we may go down to 9,100 and then bounce and shoot back up to 10 grand. And you never would have caught that trade if you would have got stopped out at negative 25% of your open price at 92.30 in this case. So it makes more sense to use that mutual insurance. So we're going to go back over here. We're going to go to the buy insurance. We want to insure the $100. And then once I get into decent profit, the profit will show where you can insure 68 cents. So let's say that if we were to insure this for 48 hours, we're going to be paying 0.0001 Bitcoin. Okay. And the way this works too, you have to have like your own mutual insurance wallet type deal. So you'd have to transfer, and I have enough to transfer, so we're going to confirm that transfer there. So let's say that we wanted to 1007. I don't see no numbers changing. Okay. So if we decide to only insure ourselves for 2 hours, the premium is going to be 0.00026 or 22. I'm sorry, Bitcoin. 12 hours, 0.0004, and then 0.0006 for 48 hours. So you're paying a little over $6 to insure you on 16. Okay, that's pretty good. Okay, and then you got a whole lot more room to let your trade play out. So even if it goes down, like if I'm buying the insurance, then I'm letting the trade go. It can go all the way down to liquidation. I don't care, because I'm only going to lose the 20%, which I would have lost 25% plus a fee anyway by using the stop loss tab. So it's just better to do it like this, I think, in my opinion, and it'll cost you less in the long run. But let's say we're going to go ahead and we're going to insure 100% of our position. We'll insure this trade for 12 hours. We'll pay the $4 and confirm purchase. Minimum size is 500 contracts. Didn't know that. Okay, so we're going to have to go in and buy another 100 contracts. We in the green. Let's go ahead and go in. I just bought 1,000. Dang it. I'm gonna change that because I don't think I'll have enough in there to buy the insurance for 1,000 contracts on this account. Still not going to take it. Okay, we will just mark it out. 500 contracts. Okay, so now we risk $20. We're going to go in, we're going to buy the insurance. We're going to go 12 hours, 100% of our position. Confirm transfer. Okay, so for a 500 contract position, 20% of that is going to be 0.00053, so about a little over $5 for 12 hours. We're going to go ahead and confirm that purchase. And now, boom, now you see it says I'm fully insured. So, now guys, instead of, let's say that our liquidation price is $9,017. So if the price comes down, because we're betting on Bitcoin to go up, we went long. So if price comes down to $9,017.50, then I would lose the whole $20.40 USD that I risked in the first place. Okay, so using the insurance, I will get this back if we hit the 9,000. If we were to use a stop loss here, let's say we're using a stop loss, 20%, that puts us down at 92.41. So we got in at 93.33, 92.41, little over $100 right there, cushion, and we would have lost 0.00053 plus the fee. So, you know, probably $6 or $7 right there. And we lost that in a $100 move. Now we have a little shy of $300 cushion, and we're only going to lose the $5 that we paid to buy the insurance. So it's a no-brainer, guys. You get way more of a cushion, more time for that trade to play out in your favor. Can't go wrong, guys. You know, try this insurance out. Get in there, use my link. And don't use this on cross, because there's still the potential of losing your whole wallet on cross. You don't want to, like, let's say you had $500 in your account on Bybit and you decided that you were going to open up a $100 contract, and then you bought the insurance, or let's say you opened a $500 contract and then you opened up the insurance and you bought the insurance for the $500 contract. It's only going to cover you for the 500 contracts. It's not going to cover you for the rest of the money that you had sitting in there that you didn't actively put in the trade. But since you are on cross leverage, for every dollar that it goes the opposite direction of your trade is a dollar that is pulled out of that wallet of the money that you just had sitting. So stay off of cross, because this is not going to work for you. On cross is good. You could still potentially lose everything, so don't do that. But guys, that's pretty much how the insurance fund works. You know, it's gonna let you hedge against any kind of losses that you may have, and you know, do this same thing if you were going short. And I don't think I forgot to show you you can go to this tab, mutual insurance. It has it on there now. If you start to go into the red, it'll start showing you what your estimated payoff time is. This is when it'll expire. Here's where you can hit auto renew and turn that on. And if you have enough money in there, it'll pay for it for you. Whoops. Scroll over here. This is just the effective time and everything that your stuff will expire. So keep an eye on that, guys. It's a super cool feature to use. Like I said, for any of you Patreons, make a new account, deposit, you know, get in there, get that deposit bonus. and check out the mutual fund insurance. It's super awesome. And it's easy to use, man. It's literally making trading that much safer, uh, especially for the new guys trying to get in here. You don't have to worry so much about getting liquidated anymore if you buy the mutual fund. If you're looking at it how I'm looking at it, I always use a stop loss anyway, and I usually go 25-30% of what my open price is. So it makes sense to buy it. It makes sense to only lose 20% and have so much more range there to let the trade work out. Then these violent wicks ain't so bad that we get all the time. So but that's with Bybit there. We're gonna jump over to TradingView, guys, and we're gonna chart a little bit of Bitcoin. We're gonna see what's going on, what is it gonna do. So let's get right on over there to that. Alright guys, this is the daily on Bitcoin, and you can see here that we are in an ascending triangle. And how ascending triangles work, they are usually bullish and they usually break to the upside. But to have a valid ascending triangle, that is the key. What makes a valid ascending triangle? And one of the most important things that you need when looking at an ascending triangle is a major point of resistance. Okay, there has to be a good line of resistance, and we have to have tested it multiple times. I'll show you some other examples of ascending triangles, but you can see here that we do have a nice ascending triangle. We got this trend line here, and then we have a major key area of resistance. And then on this triangle, on ascending triangles, you want to see higher lows. So here was our first low. Then we had a higher low here. Then we had another higher low over here. With each test of resistance that we have, it gets weaker and weaker and weaker. We need to see a test. We need to break the resistance, and we need to get a candle to close at the support line of resistance. If that can happen and it can close on, we need to break resistance, have a candle come back and close on support. If we can get the candle to close on support, that would be a sign that it is going to have a continuation and we're going to break up. I teach my guys not to trade inside the patterns. We don't need to trade inside the patterns. It's too risky. We need to play the breakout. And we need to have the confirmation. So the confirmation would be we break through resistance, we come back and we close at support, and we validate and respect support, and then that will give us our confirmation for the continuation on. When we have these ascending triangles, it's key to have the higher lows and then a very strong resistance. And if you guys look down here, we had some support that turns into resistance right across there. Then we had a trend. All the way like this. And it came down a little bit more, right like that. Hope you guys can see this good. Okay. So then we got our low, got our higher low, got our higher low, and then the breakout. And you guys can kind of see that we broke out, we came back, we tested support, we closed above support. So continuation on. Normally I'd like to see, once we get the breakout, I'd like to see very soon that we come back, quick like, that we come back and retest the resistance as support and validate and then continue on. But how these ascending triangles are, you need to keep seeing the higher low, and there needs to be a strong resistance area. And you can see that we had it here on this ascending triangle, and we did break to the upside. And now we are making a new ascending triangle, and we're just waiting to break to the upside, guys. I'm still bearish. I still think we need to have a nice little drop and a nice little reset. But you know, we're still looking at the 10,000 to 10,005. That is the key area still, guys. It'll be the key area until we break it. I'll be saying it till that happens. So be watching for it. If something bad would happen and the ascending triangles on these daily charts break down, you know, we'll turn on our moving averages and we'll see what they are telling us. Let's clear all the other stuff off. Let's throw the 100-day up on there real quick. All right. Let's get 100 in there. Make it yellow. Make it big. All right, guys. Looking here on the daily, we're using that 50-day moving average right now as support. If we get a close below the 50-day moving average, I said in the last week video that it could be bad. I did call the retest of the $9,000. We do got an area of support from 92 down to around the 8,600 area. Keep that in mind. Those are the key areas to be watching right now. If we break down below them, it's not going to be good. Be looking for the 200 and 100-day moving average. 200 days starting at the 8,200 area down to 8,000 is a definitely a possibility. And obviously, if those moving averages don't hold us up, then we got to be looking at the next key spots, and that's given us an area around the 77, 78, down to the 7. Nope, we could probably go all the way down to 6,500. There's a good area, showing it right there as a decent area of support on the chart. This is probably more than likely what's going to happen. In my honest opinion, I think we're going to see anywhere from 7,000 down to the $6,500 area. And then obviously, guys, if it really sets in and people start getting scared, you know, we could really see some big sell-offs, and it could even get down to the $5,500 area again. Definitely a possibility. Be looking for that, guys. Keep your eyes on it. Keep it in the back of your head that it's a possible move. Jump out here onto a monthly chart. I'm looking at that big bull flag again. It still on top, still looking decent. Everything's looking good. The 50-month moving average is right down there at the $5,500 range. The 21-month moving average is right around the 7,000. Yeah, about 7,000 to 7,300 area. So if we do not respect this this trend line right here on the monthly chart, if we do not respect this as support and we break under it, be looking for the first spot to test, guys, around the 7,300 down to 7,000. And then obviously if that breaks and we don't respect it and we head down to the 50-month moving average, $5,500 area, guys, it is super possible. I think that you know, if we get the break back into that flag right there and we get the close back inside, we're going to see massive sell-offs, which is good. That's just another buying opportunity. So bring it on. That's what I'm looking at on the monthly. Obviously, if we can close above the trend line here, and we can validate and respect this trend line as support, be looking for the continuation up. Be looking for the next move up. And again, that's where the 10-5 area comes into play. So, gotta keep an eye on that, guys. Let's go down to weekly chart. Same thing, guys. We are up above the flag here. We are on top, using that 50-week as a support line right now. We got 3 days, 3 hours left in the weekly candle, and right now it's looking like a doge. You can see that we had a doge back here. Came up for the top out doji candle. So, you know, if this stays a doji and we close like this, be looking for the reversal back down. 50-week moving average right around the $8,700, $8,800 mark, and then you got the 21-week moving average right around the $8,300 mark. That's going to be right on top of the trend line right here. So this will be key support. If this is broken, be looking down here at 78. That gives us an area of 64, 6,500. So 64, 65 keeps jumping up there, guys. Keeps popping up. We do got the 200-week down here. We rarely come down here by it, but when we do, most times we're rejected, and that is right down at the $6,000, $5,900 area. Keep that in mind. Let's go over here on Ethereum. Check out what ETH is doing right now. ETH Coinbase. Turn these moving averages off for a second. All right. Looking at Ethereum here, guys. This is another pretty good example of an ascending triangle. If you look here, we do got some pretty heavy support, or resistance, I'm sorry, all the way across here. Okay? We could even move it down just a touch. Alright. Now, if you draw in your trend line, and you got your resistance line that shoots all the way across, pretend none of this is here yet. You got your low, a higher low, higher low, higher low, but we ended up breaking down. So you could have played this break here. We did have a very tough area of resistance here. We don't have very much information on the week. But this is, I'm just wanting to show you guys how these break down, and anytime that you're drawing these triangles, to not trade in the formation, to always wait for confirmation and trade the breakout. It's so much easier and way less riskier doing it this way. Anybody that knows anything about trading is going to tell you not to trade inside the formations, especially guys that trade patterns a lot. You want to see a nice area of resistance, and you want to keep seeing the higher lows and then the breakout. So like this would have been a decent one. Oops, wrong line. So got your low, higher low, higher low, higher low, and then it broke. This is the way you want to see the ascending triangle. Real good resistance. Keep seeing them higher lows. Then watch for the break, confirmation of the breakout, and then trade it. But you can see that it does not always play out every single time. Even though we had a decent amount of resistance through here, I'd be watching it for this one. You draw you a trend line on this. As long as you don't have candles that come down and close underneath the trend line, the trend lines are valid. Okay, so even like this wick that came all the way down past is still a valid trend line. We didn't have nothing close underneath of it yet. So as soon as, if you would have been trading this and you would have seen the break, and you would have seen that we came back and tested the resistance, or tested the support as resistance, and we validated and confirmed it and respected it, then you would have known to go short, and you would have caught that little play. You know, you could have taken your profit and done it again over here. It just depends on how you guys draw your lines and what you're looking at. Let's go down on to a daily chart for Ethereum. So again, guys, we got this trend line here. Stretch it out as much as possible. Alright, so we got this nice trend coming up through here. And then we do got decent resistance right through there. Resistance, it was support, turns into resistance, support, turns into resistance, support, resistance, resistance, so on and so forth. You guys get the picture. So we made our low, we got our higher low, a higher low, and a higher low, and now we're going to be watching for the break. This is on a daily chart on Ethereum. So if we get that break, I'm going to be looking probably for the $200, $210 area first. And then obviously you just go down from there. So we're looking at 195 down to 165 is a pretty big area that we could potentially see, especially if we get the breakdown in Bitcoin. Be looking for that on Ethereum as well. Ethereum does tend to break down and have quite some big dumps. The oscillator, we do got the momentum wave starting to go down on the daily. So there is room to go down. We are underneath zero. The VWAP is under zero. Guys, I know there is some divergences playing out with the RSI and MACD right now on Bitcoin, so that is something to take a look at. I don't trade divergences too often, but you know, my script will print them out when they happen. So get that DCA script. It'll tell you all, and then you won't have to be looking at 50 other indicators and guessing and wondering if, you know, what's overbought, what's oversold. If this thing is saying oversold, then most all other indicators are in the oversold. Vice versa, if it's saying we're in the overbought, you go look at the RSI and the MACD and stuff like that, you will see that those are indeed in the overbought area. So get in there, get in the Patreon group, guys. Get a hold of this DCA trading script. Get into the Crypto Mentors. We have a Crypto Mentors trading script. It's set up just like this one. And then we have all kinds of other different tools. We got some very, very good trading tools in there. All kinds of different stuff. We got scripts for volume. We got stuff that'll highlight trend lines for you. We have smart candles. It's a script that will show you certain candles like bullish engulfing, bearish engulfing. It'll show you dojis. We have literally scripts for everything. So get in there, check us out, guys. We are running a promotion over at the Crypto Mentors as well. I think it is 70% off of lifetime membership. I think lifetime membership is right around $800 or $900, and right now we are offering it for $70, I think, for lifetime. So get in there, check that out, buy the lifetime access. It's cheaper than paying, you know, for what the regular prices are. So get in there, check that out, guys. All right, let's go over here to Litecoin. This was a head and shoulders I pointed out on the last video, and as you can see, it did get the big drop. Let's get the moving averages back on. So we're getting ready to have a 21 50-day moving average crossover. As you can see, the 21-day did bounce off the 50, but it is starting to curl down. The moving averages are curling down. Usually the price heads along with it. You can see here we start to curl down, and there goes price. It dumps right along with it. Be looking, if we test that 50-day up there at the $44, that'd be a good shorting opportunity in my opinion. I would take the short there, put the stop loss above the 50-day. Obviously, if it breaks that, we're probably going to see the $45, $50 area, and that's right at that 21-day moving average. And remember, guys, looking at support and resistance, we are looking at support and resistance as areas, okay? Not a single line, as an area. So that way, from this area to this area is where we are going to have a tussle. These are things that you need to know. That way, you're not looking at one single line thinking price is going to hit that one single line and stop. It will move through the area, so you need to be focused on the area. Looks like the 100-day moving average is holding Litecoin as support right now, and it is sitting down here at the $43 area, so be looking for support down there. Look for a break below the 100-day moving average, a close under it. That would be super bearish in my opinion. If it does break that, I'm looking at the $40 area again for Bitcoin, all the way down to possibly the $35 area, as we said in last video. I'll move over to a weekly chart. We had the 50 cross underneath the 100. That's bearish. We could see a drop. You know, obviously we can't tell you how big, but that right there is a bearish sign. Also, we got the 21-week moving average coming in as heavy resistance. You can see, guys, from all the other videos I've showed everybody this, we cling to that 21 moving average on the weekly pretty dang tight. Obviously, when the price candles are below that line, we are using it as resistance. When the candles are above that line, we are using it as support. And you can see right here that it is indeed acting as resistance right now. We have tested several times, and you guys all know every time we test, it does get weaker and weaker and weaker. So we may see a pop back up there to the 50-week moving average, right around the $57, but we would need a close above that 21. Come back, test that as support, validate before we're going to see it continue. I show you guys a strategy to trade this 21-week moving average when it is above the 100, the 50, the 200, and that's when every time when it's like this and we're above the other moving averages on the 21 weekly, every time we come down and test it, you would long. Well, in this case, the moving average is below all the other moving averages, so we want to do the different strategy. We want to, every time we come up and test that 21, we want to go short here, put your stop loss back behind above the 21 moving average. That way, if it does get a spike up there, it will save you. But I hardly trade the weekly chart. I do have an account for it. I have sub accounts for all higher time frames and different swing, scalp, day trades. Femex does different accounts, but that's all I got for tonight, guys. I hope you enjoyed it. I hope you guys learned something. Get in there to Bybit. Check out that mutual insurance fund. It is super awesome. It is going to save you money in the long run. Link for that will be in the description. It's super nice that you got exchanges doing things to try to help and try to make it easier and safer for people to get in and to see what Bitcoin and trading derivatives is all about. Because again, guys, this is not financial advice, but trading leverage is very risky. Easiest way to make money and easiest way to lose it. You guys have heard me say it all the time. Trade at your own risk. Don't ever trade with more than you can handle to lose. If you send Bitcoin over to the exchange, you need to think to yourself that it is already gone. You can't be trading with emotion. You can't be betting, your house deed. You can't be betting your rent payment and all that stuff, guys. Get into the Patreon. If you're tired of losing money, get in there. We will show you how to do it. And we will show you the right way and how to protect yourself. So guys, please smash that like button. Subscribe if you haven't subscribed to us already. And we will see you on Friday night live stream. You guys have a good night.